Coming up on Market to Market, Secretary Vilsack explains why an extension of current farm policy is a giant step backwards. Timely rains bring moisture to portions of the Corn Belt, but the outlook is anything but certain. And aging farmers ponder the transition to the next generation, but some growers are in no hurry to quit. Those stories and market analysis with Elaine Kub next.
Funding for Market to Market is provided by DuPont Pioneer, working with growers to match the right product to the right acre. Science with service, delivering success. This is the Friday, July 26th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Despite rising interest rates, America's housing sector is enjoying a renaissance this summer. According to the Commerce Department, sales of new homes rose 8.3% in June to a seasonally adjusted annual rate of $497,000. That's a 5-year high and the largest annual gain in 2 decades. The National Association of Realtors, however, reports that sales in the far larger market of previously occupied homes fell 1.2% in June to an annual rate of just over $5 million. Still, sales have surged more than 15% over the past year, and despite the dip, June's numbers were just below the 3.5-year high set in May. But some analysts are concerned that rising interest rates could hamper sales in the months ahead. The national averaged fixed rate for a 30-year mortgage jumped to nearly 4.5% at the end of June. And the government reported late this week that orders for big-ticket durable goods rose 4.2% last month, due largely to strong demand for commercial aircraft. The manufacturing sector has struggled in 2013 as a weaker global economy slowed demand. U.S. agricultural exports, on the other hand, are forecast to increase nearly 3% this year to a record $139.5 billion. Secretary of Agriculture Tom Vilsack returned this week to his home state of Iowa, where he spoke to producers on the impact of gridlock in Washington. But Vilsack took the back seat to the weatherman. Paul Yeager attended the economic summit and filed this report.
Beginning to address a serious issue here in this country, and that is of soil erosion.
USDA Chief Tom Vilsack headlined the Iowa Farm Bureau's Economic Summit, which was organized to help producers manage risk. Vilsack spent much of his time addressing the audience, but also found time to send a message to those back in Washington.
The yeas are 216, the nays are 208, the bill is passed.
Vilsack chided the House version of the Farm Bill as it contained no language for food assistance programs. And the Secretary said another renewal of the current bill, an option if a new bill isn't passed by October, is a step backwards.
Honestly, an extension removes any impetus for getting a farm bill done. And the challenge and the risk of not getting it done this year is that you're not likely to get it done in an election year, as we saw in 2012. And then if you don't get it done in an election year, then you have a new Congress that begins in 2015, and that you start the process over again. And the chances of getting it done in the latter part of the second term of a president equally problematic. So if we don't get it done now, the chances are that we won't get it done.
With so much uncertainty surrounding policy, producers also heard about another factor beyond their control: the weather.
Climatologists don't have to make forecasts about the future, they make forecasts about the past.
Elwyn Taylor is Iowa State University's extension climatologist. His review of this year's weather data included a cool, wet spring, record snowfall in May, followed by triple-digit temperatures less than 2 weeks later. Despite the extremes, Taylor found a parallel.
From October 1st, right up until this week, it could have been a carbon copy. The weather of 1947, the 4th worst year for crop production in the history of the state of Iowa.
Not exactly welcome words to producers coming off the worst drought in half a century just last year. 1983 was another year like 1947, when delayed planting quickly gave way to a hot and dry summer.
A disaster to the crop because the crops were not properly rooted. And so they suffered more from the hot, dry than they would have if they'd have had a normal root system.
the shortened spring season forced some producers to rush fieldwork before the soil was fully ready for heavy equipment. But some farmers had few options, as the ideal planting window passed by on the calendar with little progress. According to Taylor, the more compacted soil proved to be a major hurdle for the corn's root system, and that could be a problem from pollination through the harvest.
As soon as corn has pollinated, it only has one interest, if plants can have an interest, and that's to produce a viable seed. Because as soon as that grain is about to start developing, the plant doesn't grow roots anymore. If it hasn't got the roots down where they belong, they're not going to get there. The emphasis on roots has gone away.
Thus, according to Taylor, the crops will need at minimum average moisture to have an improved chance at producing trendline yields. However, drought conditions are beginning to return to the Corn Belt as indicated in this week's drought monitor from the University of Nebraska. 58.3% of the contiguous U.S. is in some form of drought. That's a 4-point increase over last week and a 10-point spike since June 11th, when the lowest level in 18 months was recorded.
The drought likely to persist in the west and have below trend yields, in other words. Temperature highs or lows will be significant. If we go into warm nights starting now, we could go right back to the same kind of disaster path we were on 1947 and 1983. If we stay cool, cooler than usual, we will be above the trend for the U.S. Corn Belt, which is 160 bushels. Right now, the 150 to 155 isn't a bad guess. Climate will likely be increasingly erratic during our coming 25 years.
But does Taylor call this climate change?
And furthermore, Congress has made this, it's Camelot of the world. Not only did they define drought for us, but by law, it can't go on for more than 9 years. After 9 years, it isn't a drought anymore. After 9 years, it's a new climate.
For Market to Market, I'm Paul Yeager.
The 2007 Census of Agriculture revealed something just about everyone in rural America suspected. America's farmers are getting older. According to the Agriculture Department, the average U.S. farmer is 57 years old, and the number of operators 75 and older grew by 20% in the most recent study. The trend isn't likely to reverse anytime soon. But ask an older grower when they plan to retire, and chances are they'll say, someday, maybe, but not right now. It's easy to understand. These folks have worked hard for decades, but the hard work is no guarantee of success in a risky business like farming. Most endured significant hardship at some point, and agriculture hasn't always been this profitable. But time marches on. By some estimates, more than half of America's farmland will change hands over the next generation. And as Harvest Public Media's Grant Gerlach explains, many farmers and ranchers are well beyond typical retirement age, but some are in no hurry to quit.
The farm was first purchased by my great-grandfather. He farmed it, his son farmed it after him, then my dad, and then me. I'm kind of the last guy on the chain.
Bob Hawthorne farms 2,000 acres of corn and soybeans in the Luss Hills of western Iowa. He's been doing it 60 years, and at the age of 84, he has no plans to slow down. It runs in the family. His father, Fred Hawthorne, stayed active on the farm into his 90s and lived to be 98, so Bob feels like he's still got plenty of time left to work.
I'd be bored not having anything to do. Now, I've also noticed that farmers, when they retire, buy a house in town, move into town, they die of a heart attack about the next year. It seems like farmers have to keep going active, or they just fade away.
Hawthorne is part of a growing group of farmers. In fact, farmers over 65 years old have been the fastest growing group of farmers in the country. Working beyond retirement is a national trend. In 2012, 5% of the U.S. workforce was old enough to retire, but a quarter of all farm operators were over 65. When it comes down to it, it's just easier for farmers to work longer.
It's not quite as backbreaking a task as it used to be. Well, it isn't. It's more you use your mind rather than your back, so you can go longer.
And while the average price for 2013 is yet to be determined, farming is more lucrative now than just about any time since Bob Hawthorne came back to the farm in 1955. But in surveys of Iowa farmers, Mike Duffy has learned regardless of the money or new technology, some farmers will just never quit.
Farmers are farmers, and that's who they are, and that's who they identify themselves as, and so they don't, that's like retiring from who you are. They'll leave horizontal, and that's just, that's who farmers are.
I think what keeps older farmers going is the fear that if I don't keep going, there's nothing left for me to make me feel like I'm contributing and am a valuable person. That keeps a lot of farmers continuing, even perhaps when their bodies say we should quit this.
Psychologist Mike Roseman calls it the agrarian imperative. It's something he knows personally as a retired farmer himself. It's the kind of determination to keep farming that causes Bob Hawthorne to push back when neighbors ask about retirement.
They keep bugging me and say, "Oh, when are you going to quit?" I think I'll tell them I won't quit farming until all hell freezes over, or something like that.
But even as farmers take the long view on their careers, there may be some things they don't see coming.
We know the incidences of injuries and occupation-related illnesses is higher for agriculture than almost any other occupation. Aging farmers are losing their friends. Sometimes they're losing health, and they're more prone to depression and even in some cases suicide, from what we know from the data.
Decide if that's where they want to go. And
access to care is a problem in many rural areas. The Nebraska Rural Response Hotline has been helping farmers and their families find counseling since the farm crisis of the 1980s. But many don't get the help they need. Studies have found the risk of suicide is 60% higher for farmers than the rest of the population. Studies also show a surprising number of farmers work late into their careers without a plan for how it will eventually end.
Over half of aging farmers don't have a will or an estate plan, and I think it reflects what you and I are discussing, and that is perhaps a denial of the fact that somebody's got to take over and I need to have a plan for that.
The plans older farmers make have larger implications because, more often than not, they own the land they're working. That means farmers like Bob Hawthorne hold a big piece to the future of farming. Mike Duffy describes the trend in Iowa.
In the early 80s, about 10%, 12% of the land was owned by people over 75.
Now, nearly a third of Iowa farmland belongs to people over 75. But those landowners know their neighbors are watching and waiting.
Where you see tensions is in communities, people trying to bid for land and outbid each other, and going to retirement homes and going to funerals and asking widows if, offering to rent their land, and, all kinds of nonsense like that. To some extent, it's competition among businesses, but to some extent, it's very cutthroat and it leaves bad feelings.
Bob Hawthorne does wonder what will happen to his family's farm. He knows one thing. After 4 generations, the Hawthorne family farm ends here. He has no children of his own. He never married. What will happen? It's a big question, and not one he seems ready to answer. Not just yet.
We aren't short of young people that want to farm. We're short of old people that want to move over.
When I look overhead, I see a lot of vultures circling and descending on me. They can't wait until I retire, I die, or become physically or mentally incompetent to run the farm, so they get their greedy hands on my farmland. Every farm wants to grab more land because it's not big enough. I never heard of any farm that wants to sell some land because it's got too much.
For Market to Market, I'm Grant Gerlach.
Next, the Market to Market Report.
Grain prices declined this week as cooler temperatures and timely rains delivered much-needed moisture to portions of the Corn Belt. For the week, September wheat lost 14 cents, while the nearby corn contract moved 52 cents lower. Soybeans also were pressured as the September contract settled with a weekly loss of 51 cents. Nearby meal prices followed suit, giving up nearly $20 per ton. In the softs, cotton gave back virtually all of last week's gains as the December contract lost $1.06 per hundredweight. In the dairy market, August Class 3 milk declined by 9 cents, while the September contract moved 36 cents lower. Over in livestock, August cattle lost 17 cents, nearby feeders advanced by 35 cents, and the August lean hog contract posted a weekly gain of $1.30. In the financials, the euro gained 140 basis points against the dollar. Crude oil declined by $3.17 per barrel. COMEX gold gained more than $28 per ounce, and the Goldman Sachs Commodity Index gained nearly 15 points to settle at 637 even. Here now to lend us her insight on these and other trends is one of our regular market analysts, Elaine Kub. Elaine, welcome back.
Thanks for having me.
Busy week in the commodity markets, both on the future side and in the cash markets. Let's move right in and talk about wheat. What are you seeing on the Chicago wheat contract?
Well, the Chicago wheat contract, it's been quite boring, really. When you look at this very long-standing pattern of just declining prices, what's remarkable about it, like I said, is that how long this has lasted and how unabated it has been by any sort of rally. And there is sort of no really good reason for anybody to get in and buy wheat because of the weakness in the other grains and the fact that mostly world weather is okay. There was a little bit of frost down in South America, but not enough to harm their winter wheat crop. Same story in the Australian winter wheat crop. In the feed grains market, worldwide weather is basically okay in China and Russia. So there's not a lot of good reasons for somebody to get in and buy wheat unless you looked at the fact that the dollar has been really trending lower throughout the month, and yet we have not received a lot of bullish interest from any funds or speculators yet, even with the lower dollar. So, you know, there's not really a lot there to step in and stop that tide in wheat.
Continued sideways movements is kind of where you see things going?
Yeah, sideways or down. When you look at the spring wheat, now you're still getting some fundamental news there. There was a crop tour that showed yields look great. If we get that cooler weather that's being forecast, they will probably have lower protein, but probably continue to have good grain fill and good yields. So again, that's not a bullish something that's going to go in there and spark a rally that I can think of right yet.
Advice to producers looking at the spring wheat in the field, how do you best market what you've got?
Well, there is carry in the wheat market, and like I said, with that lower dollar and the fact that it's just been going down for so long, I would look for a rally before I would be selling any wheat right now. Hopefully you've got some place to store it or a plan to store some of that if you're going to harvest it now.
And then be prepared and sell when you get a rally.
That would be my plan.
All right. Now let's take a look at, if we look at corn, we saw quite a move in the cash markets this week. We saw basis slide almost across the country. Talk to us a little bit about what's going on in the corn market on the cash side with old crop.
Right. So it has just been absolutely nuts. And it was really sparked by soybeans more than corn. But the fact was that they really scared folks. And so the futures maybe only dropped about 50 cents, even in the old crop market. But when you brought in the fact that basis was so positive or so much higher than the futures to begin with, they had lots of room and no way to keep those two markets tied together. And so they had lots of room to make the basis drop about $1.30 as a nationwide average. And it's been more extreme than that in certain localized places. So it has been extremely wild for folks who are still holding on to any old crop corn.
Now, as we look at the new crop corn situation, we do have cooler temperatures, a lot of crops starting to pollinate. We're getting into that crucial area. The market's aware of that. We've also seen some rains this week. What are your thoughts? Where is this December corn headed? Are we going to continue to slide?
Well, I wonder if the market really is aware. If you say that some of it's pollinating and some of it hasn't been. As of Monday, Iowa's crop progress, only 18% had been pollinated. And obviously it's more than that now. A lot of it did over just this past week. But that was a week ago. And then that was Minnesota, Wisconsin type of pollination numbers for July 25th. Next week is August, and we have been very, very slow. And Iowa is a very large portion of the corn crop, so it has been late. And I don't know if the market has just been looking at the calendar and saying, oh, it's the third week of July, crop is made. The crop isn't made yet. We're in pollination weather now. I mean, the late planting is still haunting us. So I think the market has been trading, a calendar and the good weather or the decent weather, the good rain that has been coming particularly to the eastern Corn Belt. So I wonder if there will be more attention paid to the effects over the next couple of weeks.
So we might have the door open for an upside rally here if the market catches on that, hey, we've still got a lot of corn yet to pollinate. We get some hot weather. Something could spark an upside rally. Where do you see December corn headed in the next month, 6 weeks?
Well, again, that's a situation like wheat where nobody seems to be stepping in. Nobody wants to catch a falling knife. It's been in this incredible decline. So you don't know when you could predict any sort of a bottom there. The contract low on that December contract, by the way, was back from 2010, and it was $3.98. And we don't have a whole lot between where we are now and between that $3.98. I'm not saying that it's going to go to $3.98. I'm just saying that I don't know how much farther it could go, but I think it's underpriced. I think between now and the reality of harvest, whenever the market realizes that yields are not made yet, and if we don't have absolutely perfect weather from here on out or an early frost, between now and then, I would expect to have this underpriced situation correct in the new crop market.
So this might be a good opportunity for end users, feeders, to stock up on some D's corn.
I think these are great opportunities to be locking in profit. Ethanol plants, you've got pretty high crude oil prices right now and pretty cheap corn. You've got reasonably high fed cattle prices and pretty cheap corn. So there are great margins to be locked in. And not only the corn itself, but the DDGs have gone back to a more normal relationship to the price of corn. And the hay market has really, really quieted down from last year because we've got, a crop of hay coming in now. So yeah, these are some good opportunities for buying some feed.
Excellent. Now let's take a look at soybeans. As you mentioned, it was soybeans that pulled corn down and really kind of set this whole thing in motion in the overnight on Wednesday. Talk to us a little bit about what was driving that. What happened in soybeans to affect the basis? Well,
I don't know what sparked it, but there was a lot of things going on, and it was sort of inevitable that this could have happened at some point. On Monday, the inverted spread between the August contract and the November contract was about $2.31 wide, or I think that was its widest point. So you knew at some point between now and harvest, the market was going to have to bring these two prices together. Why it happened on July 24th or July 25th, I don't know. I think the timing of that really caught folks by surprise, and that probably exacerbated the reactions. Whether the timing was because China decided to release some of their supplies and figured that they can limp along until the new crop comes along, and then this scares a lot of processors, and the processors dumped their basis bids by $1.20 per day, some of them. So this is, the proper adjective to describe the soybean basis this week. If I used it, it would probably be the first time anybody bleeped anything out on market to market. I mean, this is nuts the way that the soybean basis market has behaved. So if you even just look at a futures chart, you don't even get the full picture of the fact that a cash price, a flat price to a farmer, on average or in certain locations may have dropped as much as $3 this week. We went from just above $16 to just above $13 in the cash market at an unusual time. Last year, we saw similar sorts of movements in September because, again, the market was inverted and it needed to make that correction eventually, but it was much later. So the timing of it might have been an overreaction. You might have an opportunity to see if some processors really didn't have everything bought up and they might still need to be buying some. But it really caught a lot of people by surprise.
All right. Now, as you look at new crop, situation same as corn? Do you think we're a little oversold here going into this next week, or what are your thoughts?
I think the idea of late development is even more dire for soybeans than it is for corn. You look at the fields that are not canopied over and may never canopy over just because they're very stubby. They did not receive the growing degree days that these crops really need in order to be able to fill pods. And again, that maturity progress is about 13 percentage points behind a 5-year average. So we really are far behind. And now you're really in a threat of early frost for soybeans in particular. They are in a more dire weather situation than corn, in my opinion.
Keep an eye on the weather.
Yes.
With soybeans. Now let's take a look at the livestock market. We did see live cattle taper off, fell a little bit this week. Where do you see the fat cattle market headed?
The fat cattle market has been very flat, really. I mean, we're talking the same kind of prices we would have said a year ago. At about $119, I think, was the cash bid in the South this week. And there has obviously been some fluctuation throughout the year, but they seem very flat now. They have not been able yet to really the the actual the boxed beef cutout has not really been able to make it above that $200 level, and it may not be able to make it above that level. When is it going to make a breakout is the same question that we ask about these other commodities, is when are you going to get the interest to bring it back up into to where it might make it in the fall.
Sure. We pushed it up over 210 briefly earlier this summer, then it's fallen and it's been stagnant since, so we'll have to wait and see if the demand picks up. Is that what's going to be driving beef? Right, that is what's going to be driving beef, and it's sort of this larger economy picture. We do see the slaughter rates slightly higher for beef than for some of the other meats. So again, and meat in general has had more production than it has a year ago. So you get the impression that yes, the economy is slowly recovering and it's working its way into the meat market. All right, and then so what are your thoughts on feeder cattle then as we look forward? Well, feeder cattle have done a very nice job of recovering this past month, and they have been exactly a mirror of the corn prices falling. So it's just the way that historically, normally you would expect to have feeder cattle go up. So I think that trend, particularly if we see corn continue to fall, it would be very easy for that October feeder contract to make its way back up to 160 or possibly even go back up to its contract high of 164. I think that's really a possibility. All right, so just again, it's corn market driven. We're back kind of in the normal parameters on feeder cattle. Yep. Now taking a look at the lean hog contract, hogs have been a compelling story the past few months, as a matter of fact. And now we're seeing again the contracts up a little bit, up $1 over the last week. Is it sustainable? Where do you see the hog market headed? I think that it's not going to be able to make it back over its peak from June, right before the 4th of July. I think that was probably the peak we've seen. With the bacon season that we would ordinarily be looking at coming into right about now is probably also going to be late this year. I mean, all of this is sort of determined by weather again. So I think that might also be late, and I think that the processors are looking at a very large cold storage number or supply number right now. So I don't think that they're going to have the excitement to bid that back up above 87. So I'm looking at that consolidating between that $83 and $87 level. All right, so those are going to be things to keep an eye on as we work through the rest of this strange year weather-wise. Yes. Thank you so much for being with us, Elaine. Appreciate it. Thanks for having me, Mike. That wraps up this edition of Market to Market. But if you'd like more information from Elaine on where these markets just may be headed, visit the Market Plus page at our website. You'll find expanded market analysis, audio podcasts, and streaming video of our program, as well as links to our Twitter feed and Facebook account, all free at the Market to Market website. Be sure to join us again next week when we'll examine the impact of the government's latest estimates on U.S. economic growth. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by DuPont Pioneer, working with growers to match the right product to the right acre. Science with service, delivering success.